we've entered an era of permanent inflation. I showed a chart yesterday in our conference here of that since World War II, inflation has become permanent, rising every year. Prior to World War II, that wasn't the case. Inflation would flare up during a wartime and then come back down. Flare up in the wartime, come back down. But after World War II, the inflation just kept going up and up and up. So the chart looks like this in our history. And then suddenly World War II, it goes up and up and up.
So the prices would constantly
every
go up.
year inflation it gets, or prices rise. Now the rate of inflation will vary. It will be up a little bit or down a little bit, but it's always positive.
The price is always going up.
They're always going up. So we've entered an era of permanent inflation, and everybody has to protect themselves in terms of getting wage increases, return on your investment. You need at least a 10% return on your investment, I think, to keep up with all the rising cost of living. We see housing prices going up, food prices going up, and a lot of it, trade war and the tariffs have not helped because that has increased the cost of these components. It's increased final good prices. So that's been a problem. These politicians saying, oh, we're gonna end inflation. Well, that's cocky-pog. Inflation is here to stay, and we need to keep that in mind.
And do you see commodities get a lot more pricier from here? Gold and other types of commodities. There are certain commodities that show like more their precious metals for value preservation, and then there's other commodities like oil and other resources that people use for
silver and copper and aluminum. They're all rising in price. Uranium is rising in price because of nuclear growth and nuclear power. Gold has been on a huge bull market. I mean, 2 or 3 years ago, it was at $2,000 an ounce. Now it's at $4,000 an ounce. It's doubled in price. And that's normally the best indicator of inflation and deterioration in the value of the dollar. Dollar has been weak under the Trump administration, mainly due to these tariffs. Gold has done really well. I'm not sure it's the best investment right now at $4,000 an ounce. It seems like it's gone up too far, too fast. Silver's over $50 an ounce. Copper is over $5 a pound. Uranium is close to $80 a pound. Yes, commodity prices are rising, and that's the basic price floor, if you will, for raw commodities, the basis of our industrial economy. So that's causing prices to go up as well. By the way, let me mention, the one thing that is going down is Bitcoin. Bitcoin is now under $90,000 per coin, and it was as high as 120, 130. So that is one of the few commodities, if you want to call it a commodity, that has declined in price.
If you look at the economy right now, what are the areas that are potential opportunities besides the technology and AI that's booming? Is there any other sectors that you see there's opportunity for people to invest in?
It's tough to say. I do think uranium and nuclear power as an alternative energy. I mean, some people think solar and stuff like that also has a unique opportunity. More than wind and stuff, that's, I think, a disaster and should be discontinued. But even solar has environmental problems, destroying the landscape and that sort of thing. But nuclear power has this new boost from the Trump administration, the executive orders by President Trump. It's the best alternative energy source that we can get. And you have these small nuclear power plants now that can be built in 3 to 5 years instead of taking 15 years with these giant nuclear power plants. So it's good to see something like that. We're probably going to start catching up with the Chinese, because the Chinese, of course, lead the world in nuclear power plants and coal as well. So they have major pollution with the coal, but also they have the nuclear power plants, which has, it's the cleanest of all those. Natural gas, too, is another area. Natural gas is going up in price quite a bit and is a booming area, I think more than oil. So natural gas, uranium, I think is those are two areas that I'd like to see growth. And of course, AI and everything there with the data centers and stuff like that. The whole energy field has been reinvigorated with these data centers. They have to be, energy has to be provided for these data centers. So that's keeping the oil price high, around $60 a barrel, because Trump would like to see it down to $40, but it's not happening because there's so much demand for these data centers and AI.
What about incomes? Where are the incomes headed? You said you're worried about jobs.
Yeah.
Are the incomes going to rise, or is that going to be an issue because people may not get paid as much because they're getting replaced by technology?
Yeah, I mean, I think that's a real concern. Biden administration income did not do particularly well because of the inflation problem. I think they're doing a little bit better now if you do have a job. That's the key. And of course, job creation is a real problem. My latest article in the Wall Street Journal emphasized, I created a bit of a firestorm with my article on inequality and what's happening in the private sector. So it was called, We Need to Share the Wealth Rather Than Redistribute It. And the idea is the government's policy to reduce inequality is to impose a minimum wage, a living wage. It's to engage in progressive taxation, to tax the rich and give to the poor, this kind of thing, all very artificial. But what I pointed out in my article is that the private sector is actually reducing inequality on their own without the use of government, and government policies are unnecessary. And what am I talking about? Profit-sharing plans. More and more companies, large and small, are offering profit-sharing plans. They're helping to contribute to 401k plans. If you invest 5% in a 401k plan, they may add to it, give up to half to become a partner with you. The profit sharing. They have stock grants. They have stock options that you can buy. And I pointed out that companies like AutoZone and Microsoft and Tesla and all of these different companies, Home Depot, have made ordinary citizens, not just the CEOs and the executives. Yes, they've become multimillionaires because of stock options and so forth. But ordinary citizens, I estimated 30,000 Microsoft ordinary workers who work for Microsoft, secretaries, janitors, staff members, because they got stock options just like Bill Gates did in Microsoft. They become millionaires or multimillionaires, 30,000 of them today. Home Depot, people who were pushing carts around at Home Depot have become millionaires. I mean, it's been highly beneficial for companies that have had good stock performance and have done well. Now, there are companies that haven't done particularly well, okay, like Walmart or something like that, where their stock options haven't been that great. But companies that have done well, NVIDIA, for example, the shocking thing about NVIDIA is that 85%, something like 85% of employees are multimillionaires. Some of them worth $25 million or more, because of profit sharing and stock option programs. So these are normal staff members that are becoming wealthy. And it's a great way for the private sector to solve the inequality.
You mentioned the consumer is still strong, and despite that there's been a slowdown time. Do you know why?
It's a good question because normally, business spending and consumer spending go together. Consumer spending's rising, so that encourages business to spend, or business is spending and doing really well, and that's creating good jobs. And if you have job security, that's when consumer spending tends to go up. It's business oriented. The economy is all dependent on the business sector. And the business sector is in some disruptive stage right now. Creative disruption, if you will. Consumers are spending, probably because they got so much money, free money from the Biden administration, they still are spending that money. Either business spending picks up with consumer spending, or consumer spending now starts pulling back. And right now, I think there is a little bit of concern that consumers will start pulling back as business has been pulling back, and you'll enter a recession. But if it's probably a mild recession in that regard. So it's not something I'm particularly worried about.
And from what we've seen recently is that they've been lowering the interest rates, but the long-term interest rates are not moving.
Not coming down.
Not coming down.
Yeah.
What are your thoughts on the interest rates?
Well, certainly Trump is trying to pressure the Fed to lower interest rates, but the Fed can only control the short-term interest rates. And even then, you can't have too much of a disparity, because if you have extremely low interest rates, then banks will borrow from the Fed and turn around and loan the money out at much higher rates, and that will create an inflationary boom that's not sustainable, and you get a business cycle and the boom followed by the bust. I think the Fed is doing a reasonable job under Jay Powell. He's not the ogre that President Trump seems to think. In my portfolio, in my newsletter, Forecasts and Strategies, I don't have any Treasury bond position at all. I mean, 30 years at 3 or 4%, 5%, that's not enough to keep up with inflation. I think you need a 10% return, which you can get with the stock market. The mining stocks have been our best performer this year. We're up over 100% in mining stocks and that sort of thing. So there's definitely better alternatives to keep ahead and maintain that 10% gain that you need in wages and investments.
In terms of deregulation, there has been a lot of effort to do deregulation with this administration. How do you think that will impact the economy?
Well, we've had tax cuts, which I think is beneficial, because that always means more money in the private sector. So that's beneficial. And Trump was famous in his first term to deregulate the economy, and he said, for every new regulation, you need to get rid of 2 bad regulations. DOGE was an effort by Elon Musk and others to sharply reduce regulation. I don't know how successful it was in that regard, because there's state regulations too, and local regulations, construction and that sort of thing. It's not all just on the federal level. But I think the Trump administration is overall doing a good job in that regard, except when it comes to tariffs. I think that's a tax, and that's a mistake. And he's already having to back off of that, which I think is a good indication that the president is more flexible than we realized. Well, we've had a really good run this year. The presidential cycle, usually the first and second year are the toughest. Despite all the craziness that has gone on in the last year with the president, you're not sure what he's going to do here and that. The market has done extremely well, and the stock market's always forward-looking, and so so far it suggests that things are moving in the right direction overall. We will see what happens with this correction in the stock market, how long that lasts. If it lasts for a long period of time, that's not a good sign, but if we see a turnaround, then the Wall Street is basically saying the overall things are looking up.
Mark Skousen, Economist, it was great to have you on. Thank you.
Yeah, my pleasure. Thank you.